The Nasdaq 100 began the week trading above the key trend line we called out in the last video, and more crucially above the 200-day moving average, currently around 11,886. The calm start to the week was driven by Treasury yields easing off after the 2-year yield hit its highest level since November. You can see from the daily chart the Nasdaq 100 has been trading around the 200-day EMA and this key trend line for the majority of the week. Wednesday and Thursday were big positives for bulls as the key trend line held on both occasions. The 2-year yield has led the Nasdaq 100 this week. Here on Wednesday we see the 2-year yield jumping. Comments from Fed official Kashkari saying that he is open to larger rate increases in this month's meeting only fueled yields higher and brought the Nasdaq 100 down. Meanwhile, the Fed balance sheet here shows it dropped by another $42.5 billion, now standing at $8.4 trillion in the past week, the lowest level since August 22, as the Fed continues to tighten. Now you may ask, why is this important? Well, it comes back to this chart which I've shown before, the S&P 500 versus the Fed balance sheet. The March 20 low and the subsequent rally was triggered by a large injection of money into the financial system by the Fed. That money went somewhere. Some of it went into stocks, which is why you see this move up in the S&P 500 with the balance sheet. If this is being reversed, well, that money will also come out of the same place the money went into, which is why traders are concerned about the speed of tightening and the rate hikes, as it'll impact the liquidity and the flow into stocks. Despite this, for the time being, the 2-year yield peaked out for the week on Thursday, which propelled the Nasdaq 100 higher. From the daily chart, the Nasdaq 100 held this key trendline support for a second day, and more crucially, confirms a successful backtest of the 200-day moving average. I mentioned in the last video that if we were to retest and hold the 200-day, this would pave the way for another leg higher. This is what is happening today, with price now above the 200-day EMA, which proves stubborn resistance all week. However, with price breaking above it and likely to end the week above it, we should see some further gains into next week. In terms of levels to watch into next week, 12,240 to 50 is the next immediate resistance level. Above that, and you start to look at 12,420 being the near-term trend. On the downside, just like the 200-day EMA acted as stubborn resistance this week, it will now act as key support around 12,038. Below that, and it's 11,840 being the key trendline, price remains above. You can see from this weekly snapshot how important that support level is, with price above this downtrend that began from December 2021. Key events next week: Fed Chair Powell speaks on Tuesday, and the monthly jobs report is published on Friday. With that said, thanks for watching. Remember to hit that subscribe button so you don't miss out on future content, and I'll see you at the next one.